All right, let's get right into it. When you look at Nvidia, it seems like they're on top of the world, right? Most successful company on the planet. But if you dig just a little bit deeper, you find something really strange, a huge paradox at the heart of it all. I mean, the company is putting up numbers that are just staggering, breaking records left and right. And yet, right after announcing those incredible results, the stock actually took a dive. How does that even happen? So what is really going on here? In this explainer, we're going to unpack this whole situation. We're going to peel back the layers on this tech giant to figure out the powerful forces that are pulling it in completely opposite directions. To really get this paradox, you have to start with the good news. And trust me, it is an absolutely incredible story of explosive growth, and it's all being powered by the AI revolution. First, just look at this number. In one single quarter, Nvidia brought in $46.7 billion in revenue. No, that's not a typo. That figure completely crushed Wall Street's already super high expectations. And you have to understand, for a company this big, 56% growth from one year to the next is almost unbelievable. That's the kind of insane growth you expect from a tiny startup, not a multi-trillion-dollar behemoth.
Which brings us to its valuation, a mind-boggling $4.4 trillion. Nvidia has become one of the most valuable companies in the entire world. Its success has been a massive engine for the whole stock market.
So what's their secret? Well, it's not just one thing. Nvidia has managed to place itself right at the very center of a massive shift in technology, the age of AI. And their ace in the hole right now is this, the NVL72. Now, this isn't just another computer chip, it's a whole rack-scale system. Think of it like this. They've packed 72 of their powerful GPUs into a single server rack. That is a gigantic leap in computing density. And it's exactly what companies need to train these massive new AI models. And the best part? It's in full production right now. And hey, you don't have to take my word for it. Nvidia's own CEO, Jensen Huang, calls this thing revolutionary. He's basically saying that as AI gets more and more complex, Nvidia's the one building the tools to make it all happen. This is what's fueling their incredible growth. But as powerful as that engine is, it is running into some serious roadblocks. And that brings us to the other side of this whole paradox. You see, for all the amazing news, there is one giant, flashing red light on the dashboard: China. It's a huge market for them, but it's also become a source of massive headaches and total unpredictability. Just look at this policy whiplash they've been dealing with. In April, the US pretty much banned sales of Nvidia's special H20 chip for China. Then, in July, they did a total 180 and approved the licenses. But now, after all that back and forth, China is reportedly telling its own companies not to buy the chips anyway. It's just a confusing mess. And the damage is very real. In the second quarter, Nvidia sold 0 H20 chips to customers in China. Let me repeat that, 0. And the cost of that standoff? The company thinks it missed out on a potential $8 billion in sales from just one chip in just one quarter. So it's not just geopolitics throwing a wrench in the works. There's another challenge. And funnily enough, it's a problem that comes directly from their own incredible success, their valuation. This super high valuation creates its own kind of pressure. Nvidia's stock is trading at 32 times its expected future earnings. That's double the valuation of a competitor, like Samsung. When a stock is priced that high, investors aren't just betting on success, they're betting on absolute perfection. As L. Joshua Wine over at Hennessy Funds puts it, with a valuation this high, there is simply less room for error. It means any little hiccup, a tiny delay, a political flare-up, can have a huge, outsized impact on the stock. Okay, so we've got amazing growth, a huge China problem, and a sky-high valuation. But hold on, because there's one more wild card we have to throw into this mix, and it is a big one. Get this. The US government is planning to take a 15% stake in Nvidia's chip sales to China. Yes, you heard that right. The government is going to get a direct cut of the revenue when a private company sells to a foreign country. So why on earth is this happening? Well, it's all part of a bigger strategy tied to the CHIPS Act. The government gave billions in grants to companies like Nvidia, and now they're basically saying, hey, if taxpayer money helped you succeed, taxpayers should get to share in the profits. It is a completely new level of government involvement.
So how do you possibly make sense of all this? It brings us to the core dilemma that anyone looking at Nvidia today is facing.
On one side of the scale, you have the bull case, just mind-blowing growth, revolutionary products, and this massive, unstoppable demand for AI computing. But on the other side, you've got the bear case, a totally unpredictable China market, a valuation that demands perfection, and now the government wanting its own cut. And that leaves us with this final, massive question. How do you value a company when its own performance is nearly flawless, but the world around it is filled with all these risks and uncertainties? That right there, that is the $4.4 trillion paradox of Nvidia.